Paul always suspected King Crab was more of a title than a name. And he wants to be the first human to bend the claw. Because one day, the crustaceans will rise, and only Paul will be spared. Foresight's a wonderful thing. Invest in innovation, including 3D printing, with Opto.
Welcome to another episode of Opto Sessions. We're thrilled to have with us today Adam Swick, the Chief Growth Officer at Marathon Digital Holdings. That is MARA for ticker. Adam's journey in the business world is nothing short of impressive. Before joining Marathon, he was a principal at Refinery Ventures, where he played a crucial role in driving growth strategies for their entire portfolio. Prior to that, he was the Director of Strategic Finance at Kraken Digital Asset Exchange, overseeing the company's financial health and strategic planning. Adam also founded Swick Capital, a crypto asset hedge fund. How are you doing, Adam?
Good, great. Thanks for that. Thanks for having me. Doing very well today. How about yourself?
Yeah, really good, really good. Been excited for this interview, to be honest. So it's really good to have you on the call. And you're calling from Minneapolis?
Yes, Minneapolis, Minnesota. Somewhat new up here, so I am not a good Minnesotan yet. I have to brush up on all of my winter sports, become more of a hockey fan, learn how to ice skate. So working on all of those things.
And is HQ for Mara there, or what brings you there?
So wife's job brought us here.
Okay.
And so Marathon is fully remote. So we kind of have people scattered across the country. Our mailing address and technical HQ these days is in Fort Lauderdale, Florida. And so, lovely to live up north here in Minneapolis, but have excuse to escape down to Florida, whenever we want.
So they have got an office. So some people go to the office there, do they? Or
correct. Yeah, there's a concentration of people in Fort Lauderdale, so we have some office space there. Similar story with Irvine, California. Have some office space there. Have some mining sites that obviously have a lot of people working on them with the actual machines. But yeah, a little over 100 people scattered across the U.S. now.
It's pretty amazing the size of the company now. Number of employees is relatively low, I would say, which is pretty efficient.
Yeah, used to be a lot lower.
Really?
When I joined at the end of 2021, I think I was the 9th person.
Oh, wow.
And so, it's been
growing quickly, yeah.
It's all been part of the fun here at Marathon in terms of having, one foot in Wall Street, obviously as a publicly traded company, one foot in cryptocurrency world, with our core business being Bitcoin mining, one foot being startup-y in terms of having a small amount of people, and one foot being operations, actually physical machines that we have to plug in and deal with power and energy. So anyway, I guess 4 feet of this beast, but all part of the fun.
And how old's Mara?
Mara has a fun history. It's been a publicly traded company for a while. So before my times, but I believe the story is it started as a true mining company, like digging in the ground for minerals mining company, pivoted to then real estate, trying to do some real estate investment, pivoted to then do kind of basically a patent troll company, acquiring some intellectual property and trying to maximize the value from it. And then, a new leader came in, and Marek Akamoto, and decided that Bitcoin mining was the next big thing. And that really started, we're talking 2017, 18 era. And so Marathon in its current form is around then, but Marathon, the company, the legal entity has been around longer.
Wow. That's quite unusual, isn't it? I mean, most companies, when there's a pivot of that size so late on in their history, it's just not typical, is it? You run out of money before you have the opportunity to pivot like that.
Yeah, luckily a lot of things were timed really well. Our CEO was a member of the board for a while, and so got to experience that most recent pivot. And our COO has actually been through a lot of this. And so he's both the COO and the resident historian for all questions Marathon. And so apologies for doing it a disservice. He tells much better stories as it's grown through the years. But that's Marathon.
Oh, that's great. So I thought for a lot of our listeners who might not know what Marathon is, would you could just start by giving us a brief overview of Marathon Digital today, including how big the business is, its growth rate, main activities, etc.
Sure. So we like to describe ourselves as a global leader in leveraging digital asset compute to support the energy transformation. And so what do those words mean? Leveraging digital asset compute. Historically, that has meant, Bitcoin mining at its core. But as we've realized, this can mean a lot of different things. It's focusing on digital assets and the compute to secure those blockchains, oftentimes getting rewarded with coins of that blockchain. It could expand to, that definition could expand to other things in the future. But the last phrase there is supporting the energy transformation. That's the key phrase in recognizing that some of the things that digital asset compute is really good at, a lot of other things can't do. And so it's about having modular loads. And so our miners, our ASICs, our compute can be as small as 3 kilowatts, or we have sites above 200 megawatts, so huge variety. It's interruptible. And so the key thing, Amazon data centers, they try to keep running 99.999% of the time. Ours, we can turn on and off very quickly because we're obviously helping to secure the blockchains. It's not the end of the world if we turn ours off for a few hours. And so we can help to balance grids. We can help to respond to economic incentives if prices go too high or too low. Anyway, we can talk more about that later. A third piece is that we're location agnostic. And so again, a lot of data centers require high speed fiber. We do not. Actually, several of our sites can just operate using Starlink and satellite data. And so imagine, a data center that you can turn on and off. You can kind of put it anywhere. And so that means we're constantly seeking the cheapest power. What does that translate into today, June of 2024? We bounce around to $6 billion market cap. We have a little over 100 employees. Half of those are boots on the ground, actually running some of the sites that we own, data center sites that we own. Half of those are corporate employees, as we've discussed, scattered across the United States. And one of the key metrics we focused on is just how much compute power we have. And so as of today, we have around 30 exahash of compute power energized. To give you a sense, that is roughly 5% of the global compute power securing the Bitcoin network. So we are 5% of the blockchain miners. And to give you a sense of growth, a year ago, that was 15 exahash. So we've kind of doubled our compute power in that time. Our percentage of the global has gone up, meaning we've grown quicker than the global hash rate. And that's just the past. The future is also going to be very exciting in terms of starting to develop technology and sell it, continue to find new ways to use our digital asset compute in new and novel ways. But that's Marathon.
And outside of Bitcoin mining, what other activities does Mara do? Because I know it's involved in a number of things.
Yeah, our core business and that last pivot where Marathon finally found its home and what we were supposed to be doing all this time was indeed that Bitcoin mining. And so it was about buying these highly specialized machines. We call them ASICs. On the one hand, they are incredibly dumb machines because all they can do is Bitcoin mine. On the other hand, they are incredibly good at it. They are so much more efficient at it than your laptop at home. Finding cheap places to plug them in to help secure the Bitcoin network. And so that's the core business. A lot of those sites are very large, hundreds of megawatts. And so today we classify that within Marathon, we call it utility scale mining, meaning these are large mining sites, of the scale where they can truly help to balance grids. So whether that be in Texas is a very popular place for Bitcoin miners to locate, which is a kind of open, free, unregulated power market. And so think of it this way. Instead, if power increases, power needs increase, there are two options. You can call a power plant, a gas power plant, and say, please turn on, we need more power. Or you can call a Bitcoin miner and say, please turn off, we need more power. And so anyway, that's utility scale mining. The second thing related to mining, which we're focused on, is we're calling it energy harvesting. And so this is the idea of trying to partner with people that have energy problems where our digital asset compute can be the solution. So think of it like flare gas. Oftentimes oil and gas companies are flaring natural gas that they come in contact with, just lighting it on fire in the middle of the desert. You could put a generator there, and turn that gas into electricity, but to what end? And that's what the world's been wrestling with. Like, what are you going to use energy? What is going to go out to where the flare is and use the energy? The answer is potentially Bitcoin mining. To everything we discussed in the beginning, we can come to the flare and use that and monetize that flare. And so instead of just lighting the gas on fire, suddenly you're getting economic value out of it. And quite frankly, it's better for the environment because the generator is much more efficient than the flare in terms of converting methane. So that's the second business, energy harvesting. A third is our tech business. With a lot of the challenges we've faced, we've had to develop some of our own in-house proprietary technologies, both on the software side of things and the hardware side of things, such as immersion cooling technologies. And so we'll be selling those to other miners, and a lot of it has applicability to just data centers in general. And those are the three key buckets that we focus on: utility scale mining, energy harvesting, and the technology division.
And the technology division includes the blockchains you've developed?
Yes. We've worked, it's almost yes and no. It came out of that division, but the goal is for our layer 2 Bitcoin blockchain called Enduro sidechain to actually grow up and be its own thing. The idea was that Marathon obviously has a big presence in the Bitcoin community. And so anything we can do to encourage education and adoption of Bitcoin is good for us because we sit at the bottom. And so Enduro was inspired, created within Marathon, but the goal is that it becomes a community project. There's no funny business, different token or anything like that. It's just Bitcoin built on Bitcoin to try to increase the programmability, usability of Bitcoin and bring more things to build on Bitcoin. But it's really for Bitcoin rather than for Marathon, if that makes sense. But yeah, our tech team, the geniuses in there, did some pretty incredible stuff.
And what's the unique selling point of it if it was compared to other chains that are around?
Yeah, I would say everything any other chain can do, Enduro can do. And so, a lot of the other chains talk about programmability or speed to transaction confirmation. All of that can be done by Enduro, but it's on Bitcoin. I think that's kind of the original idea. Was we looked and said, what's the most secure blockchain out there? And a lot of people can debate what's the best blockchain out there. It depends what you're solving for. But when you say what's the most secure blockchain, there's one answer. Nobody can debate that Bitcoin's the most secure blockchain. And so then it was the question for us is, it seems easier. People are building on these other blockchains for various reasons. What if we just took all of the attributes of all these other chains and again, found a way to put them on top of Bitcoin? And so that's the short story is everything you can do somewhere else, but on top of the most secure proof of work blockchain.
And so am I right in saying it's a layer 2 on top of Bitcoin then? Is that what it is? Yeah.
Correct. Yeah, that's a way to think about it. You can move Bitcoin from Bitcoin main chain to Bitcoin Enduro, the side chain. Anybody can build their own side chain built on top of it using a lot of the tools we put out there. But again, to be clear, it's just Bitcoin moving from main chain to Bitcoin moving to the other chain. It's not like we created another token or anything like that.
Yeah. I've got you. Interesting. So coming back to now to sort of the business strategy and growth, what are your current plans for growth at the moment to increase revenues over the next year or so? And what growth range do you sort of expect in that year?
Yeah, a couple of different metrics we're shooting for. The first, as mentioned, the primary business being Bitcoin mining, where we're measure it at exahash, and right now we're at 30. We've set ourselves a target to be at 50 exahash by the end of the year, and so this is an incredible amount of growth. But we have line of sight to do it, and just have to execute now. So that's number one, is really growing that core business of Bitcoin mining. The second thing, which we've kind of go ahead.
I was going to say, is that primarily from new sites or just expanding capacity at current sites? Or
yeah, all of the above. New miner orders, which are more efficient and better at turning electricity into compute power. We've acquired some sites earlier in this year, which have some spare capacity, which we can fill those racks. And so we have the sites, we have the miners, we have the capital, and so now just putting all the pieces together.
Yeah. Okay.
Also focused on just expanding those other businesses. Utility scale mining is the what Marathon always has been. So it's about growing energy harvesting and finding new and novel ways we can partner and drive down our cost of mining, such as flare gas, as I mentioned, or heat reuse is another one we talk a lot about in terms of harnessing. Our miners produce heat, as most compute does, and so what can we do with that? We recently announced in Finland that we're using some miners to heat the water for district heating, basically heating the community of 11,000 residents in Finland. And so if you can get paid for that heat, that essentially offsets your electricity price anyway. So growing in the energy harvesting business, growing the technology business with sales, because again, a year ago, we didn't have any products to sell, but now through a lot of hard work, we have some pretty awesome stuff to sell. And a final metric which we have is just trying to make sure that 50% of our revenues are coming from overseas by the year 2028. A lot of reasons there, whether it be regulatory or just general diversification, thinking about too many eggs in one basket. But those are some of the goals that we're balancing here in terms of growing the core business, growing these two other businesses which have all the assets, and making sure we're a truly global company.
And what about the Bitcoin that you mine? Because I know, and many people know, that a lot of miners keep hold of many of the Bitcoins that they mine. What's your strategy there? Are you obviously the obvious one in the market is MicroStrategy. The main value behind their business is holding the asset of Bitcoin and acquiring more of it over time. Is that part of your strategy ongoing? Well, it obviously is a part of the strategy, but how much of a part of it is?
Yeah. So, I think a lot of people here at Marathon wouldn't be here if they weren't believers in Bitcoin, believing in the revolution that is Bitcoin and a lot of the things it does better than our traditional historical financial ecosystem of the globe. So a lot of Bitcoin believers in here. And so to that end, we're a big fan of being able to hold a lot of Bitcoin. I think last I checked, we had 17,857 Bitcoin on the balance sheet. And so not quite MicroStrategies, but we're trying to catch up. And to give you a sense, in Q1, we sold, I think it was 26% of our Bitcoin mined. And so the rough guiding North Star that we have is to sell enough Bitcoin to cover our operating expenditures. We have electricity costs are the primary variable input to our operations. And so selling enough Bitcoin to cover that, for example. But every Bitcoin we mine, it's an intentional decision, looking both at the operational side in terms of what electricity spend do we expect to come up, investments coming, but also looking at the Bitcoin market and seeing any catalysts there and trying to just make the most intelligent decisions we can. But yes, very proud of the amount of Bitcoin that we've been able to accumulate and will continue to accumulate.
So the strategy is to continue to accumulate more and more as a percentage.
I think so. Subject to change if the world changes, if Bitcoin goes to $10 million tomorrow, we might maybe consider selling some, or maybe not. But that's been the plan so far, which seems to have been working quite well. It's a powerful asset which we can leverage in a lot of different ways. And
I had a question about in the future. Is it 2130, something like this, when the last Satoshi, whatever is mined, or Bitcoin? Your revenues then, are they're mainly based on transaction fees? Am I right in saying that they're lower than the fee, like what you obtain for mining for a Bitcoin?
Yeah, you're right. And so in the Bitcoin mining world, we have kind of these Coinbase reward transactions. And so every time we mine a block, we are given today 3.125 Bitcoin. And that halves every 4 years. And so in 2028, that's going to get cut in half. That's hard math for me to do mentally. What's half of 3.125? 3 and a 16th or something. But on top of that, you're also rewarded with transaction fees. And so as you submit Bitcoin transactions to the network, you can attach a transaction fee to try to make sure your transaction is prioritized amongst others. As the Bitcoin blockchain is producing a block roughly every 10 minutes, and there's only a certain amount of space in that block, if you really want to be included in that next block, you might have to increase your transaction fees. And during busy times, there might be more congestion and higher transaction fees. Anyway, over the past year, we've seen transaction fees range from 2 to 22% of total block rewards, meaning there have been months where it's extremely high and months where it's extremely low. Since the halving, we've seen it kind of level out in the 4 to 6% range, which is growth from where it was a year ago. And so what really matters to us is, again, increasing usage and adoption of the Bitcoin network. And so that's on the revenue side. If people continue to use this, transaction fees will be there. And so it's kind of nice to wake up every day as a Bitcoin fan and know that it's part of my job just to spread the good news of Bitcoin. And then on the other side, the thing that we actually have even more control over is our costs. And so that's about making sure that we have the most efficient fleet, the most efficient operations, the best technology to mine, because, sorry, this is a bigger answer than I expected to give. But as mentioned earlier, we're roughly 5% of the global network. And so just by math, we're expected to win roughly 5% of blocks. And so if, I don't know, Bitcoin price goes down, transaction fees go down, halvings happen, and the revenue coming into the mining space goes down, what you'll see is the miners with the least efficient operations will unplug their machines. The least efficient miners will be losing money. They'll unplug their machines. And so what that means is, our 5% might grow to 6% if some people unplug, then 7, then 8, then 9 as the more efficient. And so all of that to say, in a simple way, someone will always be mining Bitcoin, and it'll be the most efficient person. It's kind of this balancing scale where if economics get bad, inefficient people unplug, and the per Bitcoin rewards that you're getting in a dollar denominated way might go down, but you might be getting a higher percentage of them. And so it's this fun balancing act. And that's the thing we have incredible control over, is how efficient we are, and just making sure that we're the most efficient, best miner, so that everybody else has to unplug their machines before us. So that's like a roundabout answer to your question. My first answer is transaction fees. Yes, we'll continue to grow. And my second answer is, on the one hand, it doesn't matter, because if you're the most efficient one, it'll all balance itself out.
Okay, so you're going to have a larger percentage. As long as you're the most efficient, you're going to gain a percentage share,
Yeah, and to give you an exact sense, it's kind of fun. Any Marathon employee can sign up to get a text anytime that we win a block. And so the last one that I got, we won, again, the reward from the blockchain was 3.125 Bitcoin, but the reward from the transaction fees was 0.23 Bitcoin, to give you a really real world example of something that happened a couple hours ago. And so it's kind of fun to get the text and be like, oh man, the transaction fees are up. There must be a lot going on. A lot of people are trying to send Bitcoin right now. Yes, so there's a specific example. Maybe we'll open up to the world one time and everybody can get a text whenever Marathon wins a block.
So coming back to the energy efficiencies, so basically the way you maintain a moat or competitive edge long term is being the most efficient. I know you've developed some unique technologies there. Can we touch on sort of the ways that you're defining and holding that moat by being the most energy efficient?
Sure. And I think it's a couple of different things in that equation about what efficiency is number one is the electricity price. And so making sure you just have good, solid sites with good economics. And so that's both it's much more complex. It's what's the sticker price of how much electricity you're paying. Plus, we have energy trading desks that are constantly thinking about when to hedge energy, when to sell energy. We have this ability to turn our machines on and off, as mentioned. And so when you should turn things on, when you should turn things off. And so energy is one piece. A second piece is just the efficiency of the machines themselves, in terms of how good are they at turning an electron into a unit of compute. And so that's another thing Marathon has really invested, is making sure we always have the latest and greatest fleet. These computers, ASICs, have really increased in efficiency, where 3 years ago, the state of the art would have something like 30 joules a terahash. And today, the ones that are being announced are below 15 joules a terahash. So what that means is machines today will produce twice as much compute per electron, or twice as much Bitcoin per electron. And that's over just, again, the past 3 or 4 years. And so have to continue to invest there. And the third critical piece is technology. And so that has been things like Marathon investing in its own mining pool. And so a lot of other people will just use publicly available pools to point their compute power to and actually be given Bitcoin. Marathon invested in our own a long time ago. And on the one hand, the technological improvements we're able to make with the pool is kind of a percentage point here, a percentage point there. But when you're talking about 50 exahash, a percentage point is quite meaningful. And so that's where this all started. It's then led to firmware, which is, the software that's actually running the machine. And so that has given us the ability to have immense control to dial our machines up and get more compute power out of them, dial our machines down to make them more efficient, turn them off and on, have much more insight into how the machines are running. So that's kind of been the second piece. And a third piece has been in this cooling side of things. And so historically, all Bitcoin miners were air cooled, meaning they're just machines that have a fan blowing on them, which isn't great when a lot of Bitcoin miners are located in Texas. Almost gave our operations team a heart attack when we told them that we were going to be doing a joint venture in the Middle East, in Abu Dhabi. And again, if there's two things that computers don't like, it's heat and dust. And we said we were going to do 250 megawatts in the Middle East. And so the next kind of phase, I would say, there's hydro cooling, which is actually running water over a heat exchanger to cool the plates. There's single phase immersion technology, which is the overly simplified, think like a bathtub full of oil. The oil does not conduct electricity. And you basically put the miner in the bath of oil, and the oil absorbs the heat. You can then pump the oil outside to kind of cool it like through an air conditioner, dry cooler unit, and then pump the oil back inside, and that keeps it safe. So that's actually that single phase immersion is what we're using in Abu Dhabi to run that site out there. And the next gen, which Marathon's built completely in-house, is this idea of two-phase immersion cooling, which is just plain cool to see because it's a sealed tank, and it's called two-phase because the oil is actually changing state from liquid to gas. And so this particular type of oil has a very low boiling point. And so as the compute gets hot, the liquid around it actually boils and rises up to the top of this sealed container where it hits a condenser, like a coil that you would see in your fridge that has cold water running through it. Obviously the gas then hits that, condenses back into liquid, and drops back down. So give it a Google. It's super awesome to see because what what it looks like is a computer that's boiling, which looks terrifying, and is your gut reaction to it is like, oh, that doesn't seem right. And then beyond the computer boiling, it then looks like it's raining within the tank because the gas is condensing. So just plain cool. But beyond plain cool, it greatly improves performance. And so it enables us to overclock or push our ASIC machines to 60, 100% harder than they could run in air. It enables, if things are air cooled, you constantly have to go around dusting these things, clearing bugs out from them. And so it means that a lot of these operations can be much more unmanned. It's much more efficient. And so, A, between having fans run, B, between in single phase immersion, having to pump oil outside to cool it and bring it back in. This two phase has up to a 60% reduction in cooling overhead. So the actual energy spent on cooling. Huge space savings. And so we're seeing, compared to traditional data centers, up to 75% less space needed because this is so energy dense. You can get 2 to 4 times more power in the same space, like the size of a refrigerator. And it also is great for heat reuse. Again, air cooled, you're just blowing hot air around, which is fine. But this, suddenly you can capture the hot water, the cold water that's coming out a little warmer from that condenser, and you can do productive things like it, like heat communities in Finland. So investing in this, it's one of our pain points, trying to keep our computers cool. And with data centers, AI growing so much, this is something that the whole data center world is going to continue to face. we miners have dealt with incredibly power dense things for a while. AI HPC is just starting to get up to the density of power that we have. And so they're just going to start to wrestle with these problems. And the good news is we've wrestled with them and found some pretty elegant solutions that I think will be applicable to the data center world beyond just mining.
You could license the technology off, or are you not interested in doing that?
Yeah. Right now we're focused on, we've got some very solid demo units running. People are super impressed. And so we're increasing our supply chain, taking sales today to sell them to both miners and, again, traditional data centers. But the sky's really the limit.
You're able to run your operations and do innovation at the same time is pretty incredible.
Yeah, it's kind of fun. Again, Bitcoin mining is a rougher, tougher, more on the bleeding edge of trying new things than normal data centers. Again, because normal data centers, if you go from 99.99999% uptime to 99.9999, losing that fifth nine, like that's detrimental. Whereas us, we're kind of like, oh, all right, we'd rather try this new thing that could really impact the whole operations and really push the envelope. And so again, I think we're a step ahead of AI HPC world and solving a lot of the problems that they're about to start facing.
Yeah, incredible. And sort of game of marginal gains then on this sort of thing. And these machines are running full capacity pretty much all the time. Is that right? And how often do they break, or do they need maintenance, or do they last for months and months without having to do anything?
Yeah, I would say primarily depends on the cooling modality. Air cooled, liable to break more often. Again, mostly because they're exposed to a lot more dust. The heat, they're hotter more often because it's harder to heat. Go all the way to two-phase immersion, last a lot longer, protect it. It's in a sealed container. There is no dust, stays cooler, et cetera, et cetera. They do break. And so operations has gotten really good at swapping these things out. For example, the most common thing to break on our air-cooled miners is the fans. And so, if you've ever built your own little computer and, those little fans that are this big, 2 by 3 by 3 inches or something, those are the things that we have a ton of on hand. And so if a miner breaks, high likelihood that's probably the thing that needs to be switched out. And so start there. And then kind of triage from there. Another thing that our firmware helps is having insight into what exactly is going wrong with the machines. To give you a sense, Marathon, I think, has roughly 250,000 miners right now. And so it's an easy number to say, but if if you asked me to just keep track of 250,000 things, like that's a hard task. If you told me to keep track of like 250,000 marbles, like I wouldn't be able to. Let alone 250,000, highly sophisticated computing devices. And so, yes, repairs is a big part.
Some of these sites must be gigantic.
Yeah, they're pretty. There's two ways to do it. We have some sites which are, they're big buildings. Think of it like a big warehouse-looking thing, and it's just a wall of computers. Speaking of air-cooled, where there's a hot aisle and a cold aisle, so you have all the miners facing the same way. So they're kind of sucking air in this way and blowing hot air out the other side, because obviously it wouldn't be very productive to be blowing hot air into the intake of another miner. So sometimes just a big warehouse. And other sites are containers, 40-foot shipping containers that have been modified. And so it's kind of just a bunch of these shipping containers set around next to each other. So those are the two main types of what mining sites look like.
And the shipping containers are the ones that have the liquid or oil-based coiling.
Yeah, that's what, you can do it either way. Marathons to date, all of our immersion have been in the shipping container variety for numerous reasons, which I could go into, but just where we think is the efficiency in terms of pumping the liquid out and cooling it. So I guess I'm into it already. The quick answer is it's nice to have the shipping container, and the liquid is actually just pumped out of the shipping container to some fans, some dry coolers right on top of the container. And so it's this super modular, portable, self-contained, again, 40-foot thing that, again, if one piece breaks, there's like 8 bathtubs in the container. Each bathtub has its own fan on the roof. And so, again, super modular, thinking to repairs. Yeah.
Awesome. Could we just touch on some of the financials, like the fundamentals of the business? I know a lot of people in the community like to dig into those. Just maybe some top level ones, such as year-on-year revenue growth, gross profit margin, and maybe touch on gross profit margin per Bitcoin mined today. I think is an interesting metric. I think you sort of touched on it earlier. And what are the main costs going in? I think we've probably described them already as energy, but just to recap for people.
Sure. So revenues are one that I kind of know off the top of my head. And again, incredible growth. They increased 223% to 165 million in Q1 2024, up from roughly 51 million in Q1 2023. Obviously driven by a variety of different things, both Bitcoin price, the amount of compute power that we have, et cetera. Primary cost exactly continues to be electricity. In terms of variable cost running this thing from day to day, all of our different sites have different electrical prices on any given day. A thing in North Dakota might be doing something different than a site in Texas. From an investment perspective, this is a CapEx intense business to invest in these machines, and so something that we think is well worth it to continue to invest in the latest and greatest machines. Another fun aspect, if you're digging into our financials, is a recent change where we can have net income higher than revenue, thanks to some fun accounting standards that FASB has adopted. And so you'll see a huge increase in net income if you look at our Q1 numbers, which was driven by a favorable mark-to-market adjustment for the digital assets that we hold. We talked about all those Bitcoin in the balance sheets. Who knows the best way to deal with this? Historically, you always had to, I don't know the proper accounting term, but you basically always had to mark down the digital assets. So if Bitcoin price went down to 30,000, we had to mark it down to 30,000 on our balance sheet. But if Bitcoin price went up, we could not mark it back up. And so, it just meant some digging through the numbers to figure out what actually is going on, because the value of our Bitcoin should probably be the market price. Well, the Financial Accounting Standards Board changed it recently, and we adopted the new change, which basically said you can mark it to market. And so that's what you saw in Q1 is we marked our Bitcoin to the fair market value. And again, through the accounting rules that be, a lot of that is then captured in net income. And so again, either way, the old rule had its problems where you had to pick it across. The new rule has its problems where you have to strip out the change in fair value if you actually wanted to look at the operations. But I don't know, quite frankly, just another reason I love this world is it's never been done before. And everybody's trying to figure out the best way to present a lot of these numbers. And anyway, that's I'm sure we'll make for some great case studies in business schools from year to come. This numbers adjustment.
Yes, and just to confirm that this basically because you've got Bitcoin on your balance sheet, the price of it has been going up, means that you're getting the situation where your net income is larger than your revenues, which is obviously abnormal for most companies. But because it's such a large holding and it is going up by a significant amount, you're seeing that sort of unique case.
Yeah, if you held 10,000 Bitcoin and Bitcoin price went up $1 from the last reporting, you would show $10,000 in net income. And so I don't know, these are the rules. But the good news is, again, all of the information is there where you can separate that out and say, all right, if we actually take out the change in the net value, what's the normal number say? And we'll see if it changes again in the future.
Yeah. No, thanks very much for that. I think it clears up for a lot of people. I forgot to ask something earlier about the energy efficiencies. Would you ever look into ways of producing your own energy with, such as solar farms, etc.? Or are you always looking at leveraging other companies' energy sources?
Yeah, it's a great question. Something we're constantly evaluating. And so, historically, we've done things like partner with wind farms and located behind the meter at wind farms, meaning we're taking the electrons that come straight out of the wind farm. We have a agreement directly with the wind farm, and so the electrons don't have to flow through the grid. So we've looked at those before. Something we continue to evaluate. Solar is obviously hugely on the list, and just trying to understand what creates the most shareholder value. Is it owning that, or is it partnering with a solar farm? To date, it's been partnering. In the future, that may change. A lot of complex things to consider, especially if you, again, wind, solar on that list. Nuclear is on the list in terms of, you see big Amazon partnering and buying nuclear power. You think about maybe will small modular nuclear reactors ever become a thing, all the way down to what we talked about earlier, flare gas. If the gas is spewing out of the ground and an oil and gas company says you can have it, at that point, you're kind of producing your own power when you show up with your own generator and hook it up to the gas. And so it's blurred lines. The line is starting to blur, and we're evaluating all of those. But I think it will happen for the industry moving forward. And I don't know which way it will happen in terms of, will it be the miners starting to own their own power producing assets, or will it be the power producers starting to own miners, or one or the other? But I do think that's my long-term vision. I don't know if it's 10, 20 years, is I think any power generator, nuclear, wind, solar, anything, you'll have your energy generation, you'll have batteries once those become more economically viable, and you'll have a digital asset data center. And those will all be three will be sitting on site. And there is an optimal answer for every electron that comes out of your solar farm. The grid is most profitable. Great, send it to the grid. The grid doesn't need it, and tomorrow looks like it's going to be really hot. Send it to the battery so we can store it to sell tomorrow into the grid when everybody's running their air conditioners. The grid doesn't need it, and weather tomorrow looks pretty boring. Batteries probably don't need it. Let's send the electrons over to the Bitcoin miners to convert it from electrical energy into, Bitcoin, a dollar value. And, just constantly optimizing, where should this electron be going? The grid, the battery, the Bitcoin miner, or should we be draining the batteries to run the Bitcoin miner? Like, it just seems like that's what the far off future will hold in terms of all of these worlds being interblended.
And in terms of today, do you get the most efficiencies from, are you always looking at locations that are next to energy sites where they've got excess, energy at times? Is that the strategy?
It's not all of them, but it's a success. It's a successful one, if that makes sense. It's a good way to start. Think of it, whether it be a wind or a solar farm, whether it be a grid, whether you be a government that's trying to deal with your electrons and energy. Miners are basically showing up and saying, I like to use an airline analogy. Imagine you're running an airline and somebody showed up and said, I promise to buy every empty seat on the flight. In order to do so, I would like cheap seats, but I'll buy every empty seat. And if somebody else wants the seat, great, you can sell it to them. I'll turn off and they can have the seat. But as soon as the seat opens up, I'll buy that one too. That's basically what Bitcoin miners have been doing for a long time, is finding those unused seats. And again, if you were a solar farm, an airline operator, you'd love that. Or if you were a government or running a grid, you'd love that for someone to show up and offer that. Or if you have flare gas out in the middle of nowhere, that, again, is a lot of empty seats because nobody's signing up to buy that airline seat for energy out in the middle of nowhere. But suddenly a digital asset data center comes up and raises their hand and says, I would like to do that. Mm-hmm. Like, that's the partnering with people that have energy problems is the big future here.
And it's really, I find it so interesting because there's still a bit of a bad rap going around for Bitcoin mining and the energy it uses. There generally isn't common knowledge that a lot of these energy sites have, they're just wasting energy when at times that they have it's either really hot or there's loads of wind because we just can't. There's either not demand for it or they can't store it, and so it's just lost. And it's an amazing use case for it.
Well said. I think that's people see this headline of, Bitcoin miners using a lot of energy, and they say using a lot of energy feels bad, so this must be bad. I don't know, just like eating too much is bad or spending too much money is bad. But the problem is, if I don't spend my dollar today, I'll still have it tomorrow. And if I don't eat that pint of ice cream today, I'll probably still have it tomorrow. But if a solar farm is producing an electron right now and we don't use it, we're not going to have it tomorrow. And that's the big difference. Batteries will eventually get there and enable us to store it, but that's not the case today. And so there are a lot of cases where it's actually wasteful not to use the energy. And so many miners are focused just on that. Many miners are connected to the grid and brine power. And so it's much more complicated than, using energy is bad. Energy is a very different beast than many of the things we're used to dealing with as just humans.
Yeah, I think it's sad that those early stories did a lot of damage, I think, and it's hard to change perception after that, especially when it's coming from the mining companies or whatever, because nobody trusts the mining company. So it's difficult to change the company perception.
Part of me gets it. I mean, Bitcoin is somewhat complicated. It's a very deep rabbit hole to go down. One I think is very well worth it. Energy, quite frankly, is far more complicated than I think a lot of people understand. How much has to go on for when you flip that light switch to have the light go on. Like, there's grids being balanced. There's transmission and distribution lines being sent around, with the energy being stepped up and stepped down to different volts. Like, this is a very complex world in a very, very complex world, and we're at the middle of them. And so I kind of understand why people like to take the surface answer of just seems bad and move on. Because it's hard to peel back the layers and start to think more about it, which is on us to start being better at explaining what we do.
Yeah, it's definitely changing, but it just takes a long time to hit mass market, I think. Can you explain, since the halving, what's been the implications? Obviously, it costs more now to twice as much to mine a Bitcoin. Are you starting to see other miners capitulate? Like, where are we since the halving?
Yeah. So having obviously block reward got cut in half. And so that's exactly what we've started to see is the inefficient miners have had to unplug. That's been offset by people buying new efficient machines and plugging them in. But there have been a good amount of stories of people struggling, whether it be by having not a very attractive energy price, not very efficient machines, or just not being good at running operations, or all three. And so the efficiencies in, you're starting to see behind the curtain in terms of who was just hoping. And again, the halving happened, and it's not like overnight people gave up, because again, if Bitcoin goes to $1 million tomorrow, everybody's fine. And so it's just a question of how long are people going to hold on to hope and say, maybe tomorrow I'll wake up and there'll be $1 million Bitcoin and I'll be fine. But the reality is starting to set in. And so we're seeing lots of opportunities to acquire companies, to acquire sites, to acquire machines, as the reality is setting in for some of these people that they didn't have all of the pieces put together for a successful mining operation. And we're evaluating which one of those makes most sense for Marathon to work with.
And it's obviously a vicious cycle, because if they're holding and hoping, and when they eventually have to capitulate, it just adds to the pressure of if the price goes down, supply goes up, then it becomes even harder. So,
I mean, put another way, if you have a great site and you're really good at running operations, and your only problem was you have some super inefficient machines, we'd be interested in taking the site operations and the sites, but there's no way to take super inefficient machines and turn it better. Like, there are some things that's just, it can't be fixed. It's just a problem with the asset itself. And there are some of those out there.
So I've got a couple of questions before we wrap up, if that's
Sure.
right. Number one was about, I don't know what's happened with it, but the Biden mining tax came up at some point, which I thought was quite a ridiculous thing. It's just jumping on. Again, this is it's like perception of it's bad. Maybe it's a chance to do something like this. But what is your take on this? Is it obviously it's dependent on who's elected in November, and I think it's starting to look like Trump's the front runner, which is obviously he's more pro crypto at the moment. But how are you viewing it, and how do you de-risk a situation like this? Obviously, you've been talking about moving internationally a bit more.
Yeah, that's the first way you do it, is just geographic diversification. And so that's both country-wise around the globe, but also state-wise, because again, states have their own governments, and local. And so very important for us, just from a fundamental principles, to have things different places. The second thing is when it comes to the government is, again, just really focused on the educational piece. We talked about how this is at the intersection of two complicated industries, cryptocurrency and energy. Regulators have a million things going on. They don't want to take the time to really dig into this. But I think they're being forced to now. Unfortunately, this became a partisan issue where one side was becoming pro-crypto, one side was becoming not. But as it became an issue, I think people realized how many people care about cryptocurrency. And I think it was bigger than either side anticipated. And so when both sides, I think, realized, wow, this is actually a somewhat important issue, it then caused both sides to really start digging into it and asking those deeper questions. And I think both sides are slowly coming to the realization that, this isn't as bad as we thought. There's actually a lot of good merit here. Like, again, going from that level of, miners, energy, using a ton of energy is bad, to then suddenly realizing, like, wait, maybe it isn't. And so unfortunately that got to the point where it was like, a partisan issue caused both sides to really examine it. But if that's what we needed to get both sides to really try to understand it and come to the conclusion that this isn't a partisan issue, I hope that's the path we're going down.
Yeah. And I mean, you could say both sides, they've realized that, it's a big community, the crypto community. So beneficial to be on the right side for the upcoming election, I suppose.
Exactly. Big community, young community. Yes, all of those things. Awesome community.
Yeah. And just one quick one about your background. So I just wanted to ask, from your experience with Refinery Ventures, Swick Capital, Kraken, what did you see are the top traits of successful founders or teams?
Ooh, that's a good question. I would say one of the most successful traits, I don't know, it's just the founders and teams believing that it's like their destiny to do that. And so truly finding a passion, something that was more than a job, to oversimplify. When founders came in saying, this is a great way to make a lot of money, those ones usually didn't work out. When founders came in and they didn't say it with their mouths, but you could see it in their eyes. When they said, this is like this huge injustice in the world that I have to fix, and that's why I'm here. Those were the founders that made it happen. And it could have been simple things like, having a family member in a hospital where something didn't go well because inter-hospital communication didn't go well. And it was their life's mission to solve inter-hospital communication, which, again, many of us don't think of every day, but you could tell in their eye that they got out of bed every morning to tackle this challenge. That, I guess, it leads to action. It's so great to have the big vision, but then actually putting it into action is the other big thing. Again, having the benefit of spending time in BC, there's no such thing as a new or novel idea. Everybody would come in and say, you've never seen this before, but we've usually have seen it 4 or 5 different times. And the really successful companies are just the ones that could then execute on a somewhat novel idea. So anyway, between mission driven and the execution, I'd say are the 2 biggest things that come to mind.
Oh, thanks, Adam. It's been an hour, really, really interesting hour, and I've really enjoyed our conversation a lot. It's really great to dig deeper into Marathon, one of my favorite companies I follow as well. Anything you'd like to leave the community with that we haven't touched on, or where they can follow Marathon for more updates?
Yeah, no, I mean, first thing, just thanks for listening. Again, this is a complicated world. I think it's a fascinating world. And so hopefully we've piqued your interest to learn a little bit more about one of these aspects. If you do want to learn more, you can find Marathon. Our website is mara.com, MARA.com. We're on Twitter or X frequently. And so you can follow us there at MarathonDH, which stands for at Marathon Digital Holdings. And you can find me on Twitter at SwickTalk, at SWICK, talk, my last name, then talk. So reach out on any of those things. And again, really just appreciate the time that you guys have all given to listening in.
Thanks, Adam. Hope you get a chance to do it again. Have a great rest of the week.
Same to you. Thanks.